Hey everyone, it's Kirk here again at Option Alpha. So I noticed something yesterday in my EV portfolio that I'm running as an experiment, and I wanted to again come back here and kind of document the process with you all, showing you how I found this error in here, or warning, I guess you can say, to optimize the portfolio that's running, and also what we can do to change up how it enters positions, because I noticed something as a result of testing this out and then finding this warning system inside of Option Alpha. So inside of the dashboard, you can see I've just toggled on the warning notification here because I saw it yesterday and I saw, hey, look, I've got a bunch of warnings, which I really never have warnings on positions or bots. So if I have a warning where the bot is telling me, hey, something's up, or you're running into an issue, then I can go in and check that warning and make adjustments, which is what I'm going to do here. I noticed that that warning was showing that the bot didn't have enough capital available to open a contract. So that was an interesting one because I completely forgot to add that as a criteria inside the trade ideas action. So it's actually a pretty simple fix, but what it actually led me to look at was it led me to look at why all of these warnings were happening specifically on NVIDIA, which is just one of the ticker symbols that we're testing out, and then specifically looking at the individual positions. So we're going to go over here and kind of debug this, investigate this, and kind of optimize this as we go. That's part of the standard process anyway that you should be going through for all of your testing and all of your paper trading. And I'm hoping that this video helps out in that process too. So if I go over to NVIDIA, and again, remember this EV bot portfolio, every single bot in this portfolio runs one particular ticker. And this is so it can help for position sizing, and it can help for all positions if you need to make adjustments, but just keeps everything kind of organized and condensed. And you can see that NVIDIA for sure is our worst performer in this experiment. So NVIDIA has been sucking it up lately and is down about 73%. So that's the first thing obviously here that would cause this to send an error, is that it was trying to open a new position, but just didn't have enough capital available to open a new position. The net liquidity on it's pretty low with the existing positions. It already has 6 positions. And so therefore the available capital left for any additional positions is not too good, right? But what I was looking at here is I was looking at the actual positions themselves. So if you go over to the position tab, what I saw, and this is just at first glance what I saw, and I, again, completely forgot to think about this in the beginning process, but should have thought about it. I thought that they would more naturally stagger themselves out. But you look at this and it looks like NVIDIA actually entered basically the same position for the entire expiration period. Not only this period, but then also 7 days later. So what happened is that because I let the bot portfolio enter positions, 1 position per day, which was fine inside the settings, but I allowed it to open lots of positions. I wanted to space those positions a day at a time. And that was great when we started getting a lot of data. We wanted to get a lot of data. But now that we're starting thinking about turning this thing live, I definitely don't want to have 1 position, then the same position the next day, and the same position the next day, and the same position the next day if the stock's really not moving. I want to spread those trades out over time. We call it like ladder duration, basically. We want to ladder those positions out over time. And essentially what happened here is that it entered roughly the same position. Now, some of these strikes are a little bit different, but roughly speaking, it was all short call spreads. They were all around the same strikes, and they were all entered in the same expiration period. So what we ended up having was a lot of this, basically essentially like a big portion of our portfolio was pinned to this one expiration period and this one set of strikes, which makes it really, really risky, because if NVIDIA goes the wrong direction, which it did, then everything kind of blows up for this particular symbol. So what we can do here is we can help mitigate this risk a little bit by just spreading out the actual trades a little bit more. And then of course, checking for the bot having enough available capital, which just kind of reduces the errors and warnings that we get inside of our bot. So remember, inside of this bot, I was allowing the bot to open 1 position per day and 10 positions in total. That worked out okay, except in this case, we started to see that if we allow it to open 1 position per day, and it's got enough capital at that time to open 1 position per day, for the next 5, 6, 7, 10 days, it could open essentially the same position. So what we want to do is we want to spread those trades out horizontally on the timeline so that we allow for time for movement in NVIDIA that would hopefully get us some different prices. If we had spread this out a little bit, it might have started entering some short put spreads to balance itself out, or some iron condors to balance itself out, but we kind of condensed it all into one time period. You can actually visually see this on like a calendar, just for example. So let me just kind of draw this out because I think sometimes it's hard. But if we, just in the current model that we run right now, say we actually gave NVIDIA the chance to open one position per day, and forget that today's the 13th, but let's say it's the first of the month, right? And it's just starting out the first period of the month, the first trading day. It opens a new position. Actually, let me do this. Instead of doing that, let's just do this. So it grabs a new position. Then the next day on the 3rd, right, we said one position per day. So it has enough capital, so it grabs another position. And then on the 4th, it grabs another. And on the 5th, it grabs another. And then on the 6th, it grabs another. And you can see where this essentially goes. That works okay if you get all those positions right. But what you've done in this case is you've pinned all of your expirations around the same time. So they're probably trading the same expiration contract at this point, which is what I ended up doing with NVIDIA. And you don't give the stock a lot of time to move. Let's say NVIDIA really doesn't move this week. Maybe it just kind of stays where it is. So you end up entering the same position or very similar position over time. And that was the challenge that we ran into here. Instead, what you should do is you should do something like this. You should allow the stock, and this is totally subjective how you want to do your trading and how much you want to spread this out. So I'll give you an example here of how I'm going to do it. But you allow the bot to open a position, right? So let's say it opens that position. And then what you're going to do is you're going to wait a certain number of days before entering the new position. Let's say we wait 3 days. So no matter what, if soon as the bot enters a new position, we're going to wait 3 days before we even allow it to enter the new position. And that waiting period is important because it helps spread the trades out over time. It helps spread the trades out over the price of the underlying security. And it helps hopefully balance things out because if things change in NVIDIA, it gives it time to change and then to recalibrate for a new, better trade idea. So then what we do is we say, okay, at least 3 days have to pass before we enter the new trade. So we get into a new trade here. Then what does the bot do? It waits at least 3 days before it gets into another trade. Then it gets into another trade, and then it waits 3 days. So we count 1, 2, 3 market days. And now you can start to see that we are now starting to spread this trade out over a lot of different time periods and a lot of different potential expirations. So that's how that basically works out. So we have 1, 2, 3, 4, 5. That's only 5. If we did it the opposite way, we would have gotten all 5 in the same week. Now we've spread it out over an entire month, which means that undoubtedly NVIDIA is probably going to move at that time period, and we're going to have an opportunity to spread our positions out over different expirations and different strikes and let trade ideas find different trades and different expirations and strikes that might be kind of complementary to what we're doing, okay? So conceptually, that's what we're doing. We're spreading those trades out over time. So how do we do this? We go into our scanner automation, and what we're going to do is we're going to precede this action here of finding a trade idea with a decision. Now, this is something you can do in here with any of your decisions that you have. And we're going to go down here to this one, which was that the bot last opened a position with more than X market days, which is this recipe right here. So here's how we're going to do this one. We're going to say, look, the bot last opened a position more than 3 market days. Now you could do calendar days. Obviously, you can see here, you can do whatever types of days you want. You can do market days, calendar days. You don't even have to use this if you don't want to. But in my case, I'm going to use this to help ensure that the bot is allowed to open a position per day, but that also those positions are spread out over time like we just talked about. So I'm going to go ahead and save this. I'm going to put this down the yes path. And so basically what this means now is that as soon as the automation starts running, the first thing it's going to do, it's going to check and see, did the bot last open a position more than 3 days ago? And if not, if the answer to that question is no, and it goes down the no path, take no action. I don't want you to do anything. I don't want you to find a trade idea. I don't want you to attempt anything. Essentially just want you to wait. I want you to wait for an opportunity to get into a position. Now we can run a test right here on NVIDIA. You can start this and you can see that the bot last opened a position 3 market days ago at the time we ran this test. So if it starts running today, then it won't actually open a new position. It'll start waiting and give itself an opportunity to enter a position later. That was the first thing that we were going to do here, so that gives you an opportunity to, again, spread your trades out over time. Very simple decision you can add to your automations. The next thing that we want to do, and I completely forgot about this when I did this, but this is why you test, is we want to go in here to find trade ideas, and we want to check the criteria for bot has enough available capital. That will ensure that it's only going to try to attempt a trade if the bot has enough available capital. I didn't check this before, so I got that warning, that notification from the bot. So thank you, bot, for sending me that. But I can kind of clean up the portfolio by doing that now for this particular symbol. Okay. So once I do that, I'm going to go down here and save all these changes. Because this automation is shared across all the bots that I'm running for the different tickers and ETFs, etc., I don't have to go into every single bot and make this change. I can change it one time in this one place, and now it carries through to all the other bots that are currently running this same thing. So if I go to a different one like Disney, you can see that same recipe is in here, and it's very specific to specifically Disney positions or whatever the case is. So I hope this was really helpful just to see not only how you can see the notifications and warnings, how you can adjust those, but also how you can potentially spread your trades out. I think that will improve the performance of them. I know in the case of NVIDIA, it basically made NVIDIA tank and caused it to lose a ton of money, which is fine. I wanted to do it in paper trading. I don't want that to happen when we start converting these things over live. So it was a really interesting one. I thought it was a good experiment. So hopefully you guys enjoy this. If you do, let us know in the comments. Upvote, like the video so we can get more reach to other people who are interested in this. As always, until next time, happy trading.